Well, there's no denying it. We're at war. And if you're like millions of Americans, whether you own a home or not, the concerning question is what's going to happen to home prices? What's going to happen next for the housing market? Now, historically, the opposite happens than what you may think, and that is a housing crash. See, the housing market typically doesn't crash, and this is data from decades of past history: Korean War, Vietnam War, World War II. The opposite happens. Home prices actually go up, and here's why. You see, in the past, during conflicts, interest rates have dropped, and the reason for that is because people pull back. They pull back spending because there's uncertain times of uncertainty. People worry, people get concerned. What's going to happen to my job, or what's going to happen next? And if you're not like a school teacher, a fireman, police officer, you don't see major cutbacks. If you're a factory worker, whatever it is that you may be doing, oftentimes, I'm a real estate broker, have been for 30 years. I've bought, sold, helped thousands, been in times where we've had war. I've seen the market shift and change, and it boils down to people spending money. As a result, the economy sees that, and the Federal Reserve sees that, and they will adjust the rates downwards, but that's only for a short time. You see, the short term is they drop the rates to ignite consumer spending, to try to boost consumer confidence, to basically buy homes. But unfortunately, there is just a short window, and it's not always the case. And here's where it flips. It's unfortunate, but during war times, inflation can actually rise. The opposite can happen. Inflation rises, and that's because you have shipping disruptions. You have oil disruptions. You've probably seen that at the pump. And you have to understand, whenever there's a disruption and the demand is still there at the same rate that it has been, it doesn't necessarily mean the demand goes up. It means the supply has been reduced. And when the supply is reduced, they will have to raise rates. Now, if they were to raise interest rates, and you've seen it before in the past, as simple as 1%, you see what that has done to the housing market. It pretty much puts a freeze on everything. If you've been out there looking for houses, thinking about buying a house, you can see what your mortgage payment would have been at 4% as opposed to 6%. Unfortunately, there's a lot more to it. Now, you must consider this: during times of war, we still need transportation, we need energy, we need materials, we need products. A lot of that stuff is shipped. To build houses, you got to have products, got to have lumber, got to have a lot of that stuff. Comes from all over the country. Imagine crude oil going to $130 a barrel. Right now, where we were sitting, I think about 2 weeks ago, at about $85 a barrel. If it goes to $130, we're going to have a significant increase in everything. But here's the hidden impact that I'm a big believer in what people are missing. When things start going up, building materials is one of those. When building materials goes up, it causes uncertainty. It causes people to slow down the purchasing. It causes home builders to think, well, wait a minute, what's going to happen to the market? Because we're all human. We all have the same brain. We run on the same wavelength, and we're all concerned whenever there's any sort of war, discord, or anything like that. But you can't help but go, what's it going to happen? When's it going to stop? That sort of thing. So when consumer products go up, things go up, building materials go up, it causes builders to slow down. Now, we're in an economy right now where we're already short of housing. There's not a whole lot of homes on the market because people for 14 years had less than a 5.25% rate. So they're not moving. A lot of people can't afford to move. The result is they adjust the rates a little bit, and we have another housing freeze like we've had for the last nearly 3 years. And a housing freeze doesn't cause home prices to go down. Causes them to go up. However, that is not the case in every market. Imagine this: consumers stop buying, sellers stop selling. They don't want to give up their 3% rate. And then all of a sudden in the headlines and the news, you say housing freeze, housing shutdown, housing lockdown. Well, what happens in that case is you have a lot of homeowners that aren't selling, but the ones that need to sell and want to sell, the banks, for example, that have foreclosures on the books, the estate sales, the people that are job relocating, the people, unfortunately, that are going through a divorce, whatever the circumstance may be, that's what we've seen over the last 2.5 to 3 years. The result in that, where we've seen markets where we've had double-digit, literally, increase in home prices, 8, 10, 12, 15%, we would see a little bit of a tickle downward in prices. The unfortunate thing is, the housing market, where we've seen 3 to 4% appreciation over the last 10 or 12 years, or even less than that, we probably wouldn't see a dip at all. Now, with that said, where you would likely see a change and actually an increase in prices is when there's a demand. Well, you have to look at cities, counties, areas that are connected to defense contracts, oil production. You got to look at Florida, Texas, Mississippi. Those are big oil refining areas. That oil tankers come across 500,000 barrels, literally. They're producing 250,000 barrels of fuel a day. just from the oil that comes. That's just one refinery in Pascagoula, Mississippi. So what happens is when that comes over and all of that production starts happening, you got to have more in-house producing of oil. You see typically an economic uptick in those areas. So you can see your zip code can make a big difference in the economy. Real estate is hyper-local. And to get an idea to the future, we must always look into the past. Take September the 11th, 2001, for example. After that happened, interest rates dropped aggressively. When they dropped aggressively, it caused a housing boom during the 2000s. Take the Vietnam War, inflation pushed up home prices, large government spending caused housing to actually be a hedge on inflation, which caused more people to buy homes. More people bought homes not just to live in, but to use as an investment to help with taxes. As a result, home prices went up. So what if you're considering buying or selling in this market? Here's what can happen. It's a slower time, less people buying, and with less people buying, it would cause home prices to actually come down. You'd see more homes on the market. However, if the interest rates were to take a dip with the already pent-up buyers that haven't been purchasing, remember, 2024, 2025, slowest time in 30 years for people actually buying homes. And if they were to take a dip to 5.25%, 5.5%, you would see a surge in people buying homes. Everything's fueled by supply and demand. So now all of a sudden you have a demand of those people wanting to purchase houses. As a result, you would see home prices go up. But like I always say, real estate is hyper-local. However, let's address the elephant in the room. And that big elephant is a question on everybody's mind. Will we see a 2008 housing market crash again? No, and here's why. You have to understand there was lots of overbuilding, there was lots of overspending, overlending, there was loose lending, there was adjustable rate mortgages. And what a lot of people aren't aware of is there were lots of mortgage fraud, white collar crime. And if you're not aware of that, give me just a few seconds, I'll explain this to you. They had straw buyers in a lot of cities. I've literally seen the FBI in my real estate office years ago. Here's what they do. You have real estate appraisers, title companies, mortgage companies, home builders. They'll take and build a house. They'll inflate the value. The real estate appraiser stamps his appraisal on it. The lenders give it a loan. The title company closes it. So you have a builder, an appraiser, a mortgage company lending the money, and the buyer didn't exist. You can Google that after you watch this video. It's called a straw buyer, S-T-R-A-W, completely made up buyer. And yes, it was one of the largest white collar crimes that has ever been in the United States. And there's people still sitting in federal penitentiary today for doing that. You see, for a true housing crash, we need to have credit systems and financial failure. And we've got to see that on a big scale. And we're not seeing that right now. We've seen stability. We've seen people with mortgage rates below 5.25% for 14 years. And with all of that said, you've seen a tightening on lending. It is harder to get a loan. Years ago, they had loans, they called them ninja loans. No income, no job, no asset. You also, on top of that white collar crime, you had a lot of people out there with loose lending, as I called it, where they were basically falsifying income statements and tax documents for people to buy a home. So you see, this may be a slowdown, but not a meltdown. You have to understand what's probably going to happen is you have some people will buy if the rates drop. They'll buy if the rates stay the same. They'll buy if the rates go up. It's so important to understand during 2025 was the slowest home year for home sales in 30 years. Yet every single day in the United States, 11,123 people bought a home. That's fact. 11,123 people bought a home every day last year in one of the slowest housing markets in 30 years. So I always just tell people, look for the price of crude oil to go up, because when oil goes up, transportation goes up, because everything that we touch, feel, have, buy, purchase is put on a plane, it's put on a train, it's put on a ship, and it's put on a boat. And not too many of those that I'm talking about run off anything other than diesel fuel, which is crude oil. And it's not just the oil, that's what people miss. You have to understand that plastic is made as a byproduct from crude oil. The TV that you're watching this on, the glasses on your face, the jacket, your clothes, the phone that you have in your hand, it's called plastic. And until they create and invent something where we're not relying on that, our whole world right now, regardless of where you live on this planet, revolves around crude oil. Thank you for watching. I hope you learned something from this. What it boils down to is real estate's hyper-local. Will we see a housing crash? Absolutely not. I'm Wayne Turner. Be sure and subscribe. Give me a thumbs up if you like it. Leave a comment. Your voice absolutely matters more than you think. Until next time, thank you and God bless.